My favorite trading indicator. Hi, it's Charlie giving you Wednesday's video. I hope you're very well. So, I mean, I don't know, I'm probably exaggerating, but thousands of different indicators that traders use all around the world. And the one thing I would say is it really doesn't matter what you use. And if you just use price, because, price is the first and foremost indicator. And if you only use price, that's absolutely fine. Price is an indicator by itself. But this video is about what's my favorite indicator that I would put onto a price chart, and that to this day is a moving average or moving averages. But this is my personal favorites. You might have your personal favorites. So I'll talk a little bit about this. So why do I like moving averages so much? Well, I started trading when I started trading many years ago, 20 odd years ago. Moving averages were part and parcel of what you would use. There were fewer indicators. There were still plenty then, but there's a lot more these days. And this was one of the first, I guess, price indicators or indicators to go onto a price chart that I probably ever learned. And I guess back in those days, you were still taught about moving average crossovers. But then I learnt when it came to moving averages that you don't have to use them like that, because I mean this is where lots of people get confused with regards to moving averages. They say, oh, they're a lagging indicator. That's because, as I always say, people that say that just don't know how to use them. So moving averages, how I would use them would be, don't get me wrong, if you see a moving average crossover, it's confirming what price has already done, but I like to use them for the subtleties that they give you. So some of the subtleties are the slope, the angle of a given moving average, like let's say a 50 period moving average. Is it sloping up, down, relative to what price is doing as well? So sometimes, for example, you could have a moving average which is doing that, but price has actually come down into a support zone down here, but a key moving average like that 50 is still facing up like this. That gives me sort of a heads up that price should want to bounce. That's useful information for me when it comes to using moving averages. So the slope and what they might be doing, these moving averages, relative to price. Also, moving averages when price comes into moving averages, and using moving averages as support or resistance themselves. So I can use them for entries as price comes down into a moving average to buy off of, but also to use as targets as well. So because quite often when price comes down to a key moving average, it will bounce off that key moving average, but also, and like even as I'm speaking here, this is just on an hourly chart here, we can see the euros come below. This is my 20 period moving average, my blue one here. It's come below, then it's coming back up, and it's having a little think about it, isn't it? It's having a little reaction to the 20 as it's coming back up. Is it going to completely sell off? I don't know that, but it doesn't really matter. What I'm talking about is how you can start to use moving averages and say, oh right, okay, if I was bearish right now, if I had more analysis calling for the euro to come down, then that would be a nice level from which for me to sell from. And likewise, maybe the 50 down here might be a nice target to target if I did have a bearish view. So before I know it, I can be using different time frame moving averages or different length of moving averages to place on my chart. So from a small length moving average right way up to 200 period moving averages and even a 500 I've got up here, to then use them as support and resistance, and as price targets as well, for both for profit taking when I'm in trades, but also for finding entries off as well. So there's actually quite a lot you can do with them. Now, by all means, put onto the chart onto the drop down today into the comments what favorite indicators you have. And like I've said though, there is no best indicator. I've yet to meet a trader who has the holy grail of trading. So Please don't try and say that you've got something and it is better than anything else, because that's not true. It's just what suits you as an individual. And I think, and I've done videos on this recently, it's about, when it comes to trading, it's about finding what's right for you to trade with. What's right for one person won't work for another, because it comes down to the sort of personality type that you are and the way that you want to look at the markets. I love moving averages because I think they're very graceful. They are an average of price, so they are giving me what the average price has been over a given period of time. And I know that price likes to mean revert. So what better place to mean revert to than its average price? And that sort of thing goes on a lot. So a little bit of food for thought for you there. But by all means, yes, put others on, put whatever indicators you use. And people do say, Charlie, why don't you use X, Y moving? Why don't you use Fibonacci, or why don't you use pivots, or static indicators in that regard? And I have used them. I've used so many things over the years, and it's not that there's anything wrong with them. I just found that I didn't need them. They didn't add anything more to what I was doing, and that's why I don't use some other indicators. And I still use more than what I'm just showing on here today, but certainly it's about finding what's right for you. And if you say, do you know what, all I want to do is put some trend lines on and just follow the price action and candles, or whatever types of price bar you use, that's fine too. But there's nothing that is the holy grail. It really is about finding the right thing for you, and saying, well, actually, I'm comfortable with using this. I remember one thing before I go. The late Mark Douglas saying to me many years ago, probably about 20 years ago, that you could lock someone in a prison cell with a chart, and if you gave them just a 10-period moving average for 6 months, and they were just locked away in a prison cell for 6 months with a chart, a price chart, and a 10-period moving average, they'd probably find all sorts of different ways to be profitable with purely just that. And I think that summed it all up, really. Anyway, that's enough from me for today. Breathe in and breathe out the doubt. Take care for now. I'll see you at the end of the week.